All right, Charlie Gasparino and I were just talking about this market now in and out of session. Lows were off the worst levels. But again, this is across the board and all on interest rates backing up here. Now, what got their attention is across the 3.20% level on a 10-year note. That gets a lot of attention simply because the 10-year is attached to so much, from mortgages, home equity loans. A lot of car loans are attached to this, educational loans. When that rate goes up, all of those rates go up. And if you have a lot of those type of loans, well, you're seeing a lot more money you're going to have to put out to keep them going. All right, Charlie Gasparino, on that, you and I, of course, remember when rates were a lot higher, but perspective is everything. Now, this wasn't a worry yesterday, suddenly today. What do you think?
I mean, that's the markets, right? It's
Absolutely.
always a headline, and it's a headline to pay.
I'm glad you said that that's the market.
Right, they go up and down, and stock traders. I used to hang out with a lot of bond traders because of the markets I used to cover, and they used to say stock traders are stupid. I'm like, why?
Were you with the bond buyer, right?
Yeah, I was with the bond buyer, but after that, I covered many different bond markets, and that's how I was able to break a lot of stories about the financial crisis, because I understood the short-term lending market. But anyway, these bond traders would say stock traders are stupid. They don't do any analysis. They literally trade off headlines. The headline today is at 3.2% on the 10-year, which is getting high, and it's a reason.
So like the initial reaction
right.
to 3%.
And it's a reason to take some profits. Yeah. Here's where this becomes problematic long-term. If you're an investor out there, you should really watch it. We have GDP prints that are coming up. We're going to have deficit numbers that are coming up. If we don't hit regularly decent GDP numbers, anywhere between 3.5% to 4.5%, if we don't keep this going, we're going to have budget deficits that gap out. When budget deficits gap out, you have to pay higher interest rates to attract people to buy your debt. That's where this thing gets problematic, and if that happens,
we have $20 trillion in debt. Even a slight uptick
could be a problem. If we get, and I tell you, the deficit is a big thing, because if you talk to Mick Mulvaney, who I really like, and he's a smart guy, the budget director, he would say you need.
He really is a smart guy.
He's a really smart guy. He's one of the best guys we got in there. And
no nonsense, no
and he's a numbers guy,
yeah.
But he will tell you, if we can maintain 3.5% GDP regularly, we're going to pay down the deficit. And, history shows that, if you put
a cap... pay down the deficit a little bit, you're going to go a long way from getting the debt under control.
Right, but, a reasonable amount of debt's not the worst thing in the world. Everybody has
we're beyond reasonable, though.
Yeah, but once you start taking the deficit down, you do pay off the debt. And that was one of the great things of the Clinton years. You took down the deficit so much, we did start paying off our debt. And then things become much more manageable. The problem is if you have lower economic growth and you have deficits, that's where things get really squirrely, and it changes the global...
So that's what you're hanging your hat on, right? I mean, the optimistic view is that this reflects a strong economy. We're seeing it again and again in the stats, and of this view that even in the third quarter earnings, once they start getting them, they're going to be very, very strong year over year, and that everything will be okay?
Yes, but here's where you got to worry, and it's not the earnings scenario. It's if the tax cuts, which was a massive tax cuts, particularly for businesses, not a lot on individuals, if that does not create the supply side bang for the buck, improve the economy enough, if the economy falls back into subpar growth or just that sort of mediocre, crappy stuff that we had over in Obama, which was a combination of mediocre and crappy, depending on the quarter.
But it wasn't meltdown either.
It wasn't meltdown, but
mediocre.
You still need decent GDP growth.
So will that get rid of a lot of these sins, a lot of these problems? I mean, another thing that's been tossed around is this. It could be a good thing, but it could be a bad thing. A tight labor market means that all of a sudden. It's going to get still tighter. Wages are going to go up more. Inflation's going to be a problem.
Had such lousy wage growth over the last.
And by the way, I always look at that. There's nothing wrong with people getting a little bit more money in their pocket.
And they haven't really, as our argument showed the other day. I went back and looked. We haven't had decent wage growth. They're still stuck.
There's wage growth going on, and I've looked into that and corrected you for your idiocy there.
2.9 from 2.7.
From the average of the Obama year is 2.2.
Right, but it's average now what?
All right, 2.9.
No, it's not average. That's where it's at last.
You dismiss facts that I throw in your face.
I'm telling you.
So let's talk a little bit about the environment here and companies that might be ripe for a fall. A lot of financial issues were soaring based on the idea that this was the Goldilocks type of environment for them. Is it still?
Banks are still, usually when you have collapses like this, most of these sort of big collapses happen in the financial sector. If it's not You know, I don't see a lot of that. I don't see a lot of froth on tech firms. I mean,
Isn't Bernie Sanders going after the banks, the big banks? Still
wants to break them up.
Right, wants to break them up.
Essentially wants to bring back Glass-Steagall. Right, by saying no investment bank and commercial banking.
Because he says this could happen again if we're not careful.
You know, it could, and I agree that Glass-Steagall is a common sense.
That separate investment banking from traditional banking.
Because you don't want the investment bank, because traditional banks are insured, right? You have your deposits there, right? You don't want a mistake on the investment bank, which, you know, is where
how would he break them up? I mean, let's say Bank of America broke up, he would separate it from Merrill Lynch. Is that what he's saying?
That could be one way at it. It's hard because a lot of these banks.
I think that's some noise out there that he is getting some political
Remember,
support.
John McCain was supportive of this too. This has some support in the Republican Party.
That's noise that could contribute to a sell-off. If
it
gains muster.
If that gained muster, bank stocks would trade off. Definitely. There's no doubt about that. And then people would have to.
Will the judge have any effect on all of this? You notice I'm ping-ponging here because I want all the breaking news. That's how
fine.
we roll.
The judge would have an impact on that if the banks chose to bring it to the Supreme Court.
If the judge makes it to the Supreme Court.
But look at it this way.
The expectation is he will, right?
That's what I'm hearing. I don't know what's in the minds of some of these.
If he didn't, if somehow it was shot down, would the markets be stunned?
The markets would have an issue. Investors would have an issue because, here's the thing with the markets. They're going to look at the next one in line, and they're going to look at if that next one in line gets approved quickly, it's not going to have an impact because that next one in line is, I can't remember her name, but she's probably more conservative than Kavanaugh. I mean, she's more conservative on Roe versus Wade. Let's face it.
The Notre Dame professor.
Yes, I mean, I think if the Democrats were smart, just from like what they're going to get, and if they don't think if they have to believe the Republicans aren't going to win the Senate. If they think the Republicans are going to win the Senate, keep the Senate, they should approve this guy just on politics because they're going to get someone a lot worse from their standpoint.
Real quick, the House, the Senate, what's the fortune? What does it look like?
You know, before this Kavanaugh thing, I thought the Democrats had a chance of winning the House and the Senate. I just wonder if they went a step too far with this, with all these sort of weird, these allegations are coming out of like nowhere. And there's not a lot of meat to the bone. So who knows how much Trump has energized his base. He's got some people at the New York Times, Brett Stevens, who hates Trump, saying he's doing a great. I mean, that blew me away when I saw that.
Right. Not everyone at the Times hates.
No, not everyone.
All right. Thank you very, very much, buddy. Charlie Gasparino here.